Welcome to the Tribes United, ladies and gents. Scotty Z here again, your guide for this adventure. And today we're joined by a friend of mine from Bali. How long ago did we meet, mate? 10 years ago, must have been 2012-ish, something like that. Jeremy Britton, who is now not in Bali anymore, based back in Australia. And I reached out to Jeremy because Jeremy is very outspoken about Bitcoin and cryptocurrency and has been in the finance space for many, many years. Very wizened in this realm, and I want to understand what's going on with Bitcoin, what's going on with crypto. Is it here to help us, or is it controlled and manipulated? That is really the question that I keep coming back to. So Jeremy, welcome. Great to have you, mate. Can you fill in a bit more of your intro and who you are and, what you've done and why we should really listen to you?
I love how you say wizened, like that's the grey beard that you're talking about there.
Yeah, exactly. You got a couple on me.
Yeah. So I started out in financial planning back in 1992. So it's 30 years this year. And obviously, stocks and shares and property and bonds and all that sort of stuff. But also because I wasn't very smart when I started, I was only 19. I didn't know a lot of the stuff that my peers knew who'd been in the market for a while before me. So I got fascinated looking at old charts and just looking, what happened to the stock market in 1965? What happened in 1945? What happened the last time there was high inflation or a war or something like that? And you start to see these patterns develop. And when you look at what's happened before, you can sort of tell what's going to happen next. Mm-hmm. So I would educate my clients because before moving into financial planning, my parents were both school teachers, so I had sort of education drummed into me. Yeah. So I wouldn't just invest people's money; I'd tell them why we're investing into this. And oftentimes, we seemed like we were investing in the wrong place at the wrong time. And I'd be saying to people, just wait. This is because of what happened previously when there was high inflation, when there was high interest rates. This happened. So after a while, I got a bit of a knack for investing people's money. It was sometimes a little bit too early. So, for example, I didn't know the 9/11 plane crash was going to happen in 2001. Yeah, had no idea. But when the stock market gets overheated too much, there's always a trigger event. And sometimes the trigger event is a war or an assassination or something like that. An event that makes people sit up and go, holy cow, what are we doing? Why are we paying $140 for a Google share when Google hasn't made a profit in 10 years? So I got clients out of the stock market 18 months, 2 years before 9/11 hit.
Because it was overinflated.
Yeah.
Right. Okay.
And the property market had been very, very still since the high interest rates of the early 90s, 92, 93. Right. So we got out of stocks and into property. And then, people sitting there going, what are we doing? What are we doing? But then 2 years later, when the plane crash happened, the stock market crashed, property took off, and was just, wow, we just made 300% and avoided losing 80%.
Really? It dropped 80%. So quickly on that though, like you're saying that when the stock market is overinflated, there is some sort of a catastrophe that brings it back to reality, like a war or something. How is there a correlation between stocks and prosperity and something like 9/11? Wasn't that just like a terrorist attack that was unplanned and just sort of happened? How did that correlate to an overinflated stock market?
If 9/11 hadn't have happened, there would have been something else. Like stocks had just been going up too fast, too quickly for too long. Right. And that's what happens. There's these boom and bust cycles. There's not a sensible thing. Like a year or two earlier, the Google shares were $10.
Oh, and, wow! It went to 140.
Everyone was getting excited about. Yeah.
Right.
So 10 times your money in tech stocks. But during the period 99 to 2002. Even Microsoft and Apple, who had long established businesses and real stuff and real profits, those guys dropped by 60 and 80% respectively.
Wow.
So imagine holding tech stocks, that companies who'd been around for like 20 or 30 years at that stage, all of a sudden you've lost 3/4 of your money. So because they just got too high too fast, and they've got to go back to normal. Because over time you get an average, and if it goes way up too high, it's going to come back down. And often it overcorrects as well. So it goes down too low and then it has to come back up to the average. Yeah.
Right. Because you're saying about being, and thank you for that, 30 years. I didn't realize that you'd been in the finance industry for that long. That's really great. Again, you're showing that wizened elder age there. And I'm glad I reached out to you because that's fascinating. I follow Ray Dalio. That man to me is fantastic what he's doing now. If anyone doesn't know about Ray Dalio, self-made billionaire. the largest hedge fund management firm in the world, Bridgewater Associates. And he's retired effectively now, and he's just sharing all his wisdom, writing books. Principles was a great book. But he talks a lot about being that student of history, exactly what you said. What happened in 65? And he's done that, the Changing World Order. You've probably seen that video at least, if not the book, about what's going on at the moment with the Changing World Order and what we can potentially expect to happen in the finance world, in economics for globally, right, with this transfer of power. But so again, the correlation between you studying history. So over the last 30 years and sort of feeding into Ray Dalio, what's going on with the global economy, mate? Where are we heading? You know, if you're talking about 2001, there was a 60 to 80% crash because planes flew into a building. That's like, that's child's play compared to money printing in the way that we've had it in the last couple of years. Plus now they're talking food shortages, all the sanctions on Russia, which has increased the price of the ruble, completely backfired on the global power, the reserve currency of the world, the US dollar, right? Is now the ruble is stronger because of their sanctions against them. We're going to cripple the Russian economy. Like, what's happening with the global economy, mate? And what do you see in as a student of history is going to happen?
Well, everything is largely unprecedented, but there's still commonalities.
Yeah.
You know, like World War I was similar to World War II, was similar to Vietnam, was similar to the Korean War and that sort of stuff. And, you know, we've had this ongoing war on terror for the last 20 odd years.
And they don't want it to end. It's very profitable.
Yeah. I mean, the money printing thing that's going on now was basically exactly the same as, or largely similar to what they did when we had the global financial crisis. And again, that was just a time when property prices in particular had gotten too big too fast because they were giving out these ninja loans and things like that to people who had no income, no job, no assets. Yeah. And the property price ballooned and people just thought, oh, look, my property's doubled in the last 3 years. It's probably going to double again in the next 3 years. I better take a loan against it. Yeah. And it's like that's sort of stupid thinking. I think that whatever's going on now is always going to go on. Whereas going back to a historical sort of average is more likely. Now, the funny thing is, and again, we didn't know the pandemic was going to happen. We had no idea this disease was going to have an outbreak from China.
I think some people did. We won't go there today. Maybe, but yeah, you and I didn't, for sure.
So in September 2019, so 6 months before the pandemic, what we noticed was a repo debt default. So the banks borrow money from each other at certain interest rates around the globe. And normally they're paying each other 2%. And there was a liquidity event because people were borrowing too much money and couldn't pay it back. And so on September 17, 2019, the repo rate spiked up to about 15%.
From
2%. Yep.
Jesus.
And then dropped back down the next day to 2% as liquidity was restored in the system. And we just sort of looked at that and went, that's bad. Like, that's bad. Like, we're literally got governments running out of money. What's going on? We also looked at the copper price, and the copper price had been going down. So you think of all the Tesla electric cars who use copper, all the copper that goes into your mobile phones and your fridges and that sort of stuff. So if people expect the economy to go well, all these manufacturers would be buying a lot of copper and say, we're going to make more fridges and more things. The price would go up. Copper price was going down in September. And we looked at that and went, that's kind of bad as well. That's sort of showing that a lot of businesses out there were expecting that 2020 was going to be a worse year than 2019. So we had the first little red flag that gave us a warning, and then the second red flag, and I went, that's it. I'm not waiting for the third one.
Wow.
So we actually communicated to our clients in our newsletter and also on the blog site and said, something big is coming up. And if the proverbial hits the fan, then the government is going to react, or the central banks are going to react by printing lots of money, because that's what they did in 2008. That's what they did in the 1930s. Whenever there was
all they've got.
They just print lots of money. Yeah. And when they print lots of money, of course, the value of money goes down because there's a lot more money in the system, and scarce commodities go up. So September, 6 months before the pandemic, we said to our clients, back out of the stocks, buy gold, buy silver, and buy Bitcoin. Right. And again, we were early. We didn't know that there was going to be a pandemic. We just thought there's going to be something piling up. Something's going to happen. And of course, 6 months later, when the pandemic hit, the stock market took a dive. Bitcoin itself took a dive. But over the next 2 years, gold went up by 50%, silver went up by 100%, Bitcoin went up by 800%.
Jesus.
So the three things we recommended
well done.
Massively profitable.
Yeah.
Whereas obviously the stock markets have been hammered. And even now, like we're sort of like, oh, we're recovering from the pandemic now, but Netflix has just gone down by 75%. You know,
75%?
Zoom, Zoom, the platform that we're chatting on, shares in Zoom have gone down by almost 80%. And there's almost 1,000 companies on the US stock exchange alone that have gone down in the last 6 to 12 months. So we're not really recovering from the pandemic.
We're not, but why are these, like Zoom? I mean, isn't everyone at home? Netflix, isn't everyone at home? Shouldn't these things be going? Now, did they have a massive spike during the pandemic and they're correcting?
Exactly.
Yeah.
So
we're coming back to reality, effectively.
Exactly.
Yeah. They just got overpriced. Like you said, what happened in the Google tech stock days in the early 2000s. They're just coming back. Will they recover? Will the stock market recover? Because there is people saying now that we are moving into, or we're already in a recession, and then we're already in a bear market, both for crypto and for stocks in general, and the economy, if we're talking recession. Is that true, or is this just a slight rebound based on the current events, and we're going to come back up again, or are we going to depression and to a full bear?
Well, I have a controversial view. I think this is...
I like controversial views. Yeah, okay, already a depression. So they're fudging the numbers just to make the population keep spending and taking credit to try and inflate it. But you reckon we're already in not recession, but depression, which is supposed to be three quarters of down? Yeah.
So if we've had 2 quarters, which is a technical recession. But then if they can fudge the numbers and make the third one look okay, then technically we're not in a depression. It's just a recession.
So, but on paper,
not so bad.
Exactly. And the fear in the marketplace is what causes people to stop spending, which causes the increased recession and depression. So they want to avoid that, especially how fragile the economy is already. But did they have 2 quarters on the books going down already? Like, have we been officially declared to be in a recession, or did they fudge the numbers the whole way?
They definitely fudge the numbers. I mean, you know yourself from going out and buying things that prices have gone up.
Oh, right? Mate, even in Russia, but the sanctions haven't hurt us that much. But I know a lot of other countries are suffering. But yeah, for sure, prices are going up.
Yeah.
Everyone's
this is again something we predicted, because we said there's going to be something go down. The central banks are going to print money, and of course prices are going to go up. So be prepared for higher inflation, and that's why we suggested the scarce commodities, gold, silver, and Bitcoin, because you can't create any more of those. So they're scarce; they're going to be more valuable. But what we're seeing is like the government's coming out and saying, oh, the inflation rate's only going to be 3%. And like, no,
what's the real inflation rate?
What's the real inflation rate? Like, have you gone and bought oranges lately? Have you bought fuel lately?
Exactly.
You know, the rents have gone up by 12 and 15% across Australia.
Wow.
So when the government says the official inflationary figure is 7%, you can bet your bottom dollar that the real inflation being felt by normal people is probably closer to 20 or 30. But they've fudged the figures by using the basket of goods. Like back in the 1970s, they used to have a basket of goods and say, okay, we'll allocate a certain amount to rent and food and fuel and clothes and whatever. They didn't include toaster ovens and microwaves and iPhones and things like that. But in the 1980s and the 1990s, when we were going through, again, higher inflation, they fudged the numbers by putting things in with, because we were getting all of our stuff from China, and the Chinese keep dropping the prices of TVs and phones and things like that when the new technology comes out. So they can say, oh yeah, inflation is only this because they're counting things that have dropped in value. But you and I aren't going out and buying a new car every year. We're not buying a new TV every year. We're not necessarily buying a new iPhone every year. However, we are buying food and clothes and fuel every week. Every week, yeah. So yeah, the numbers are definitely fake. We don't trust the government, but obviously the government's trying to quell the panic, because if people panic, there's going to be riots in the streets. There's going to be people smashing open windows of shops and stealing stuff and robbing people. So I just want to say it's not so bad. Here's our official figures. That's why they're called official figures. And,
exactly. There's already riots in the streets. Sri Lanka, bankrupt, run out of money, corrupt government, controlled by one family. And you guys probably in Australia or America or Canada where you're watching this, just go and like DuckDuckGo. Don't Google search anything these days. Go on DuckDuckGo search. I think they're a bit control. I use a Brave browser with a Brave search engine now, by the way. Yeah, Brave's really good to try and
you
get
get free crypto for doing that, mate.
Yeah, I've got to set up the wallet. It keeps telling me to set up the wallet. I'm like, and we'll get to crypto in a second because I've got a love-hate relationship with Bitcoin because it's bit me a few times and then it kisses me again, then it bites me again. I'm like, what are you going to love me or are you going to hurt me? I'm not really sure yet. It's like a beautiful dog. But Sri Lanka right now, guys, go and check out Sri Lanka. They are in food shortages. There's no gas. There's no fuel. There's like riots on the street. They're pulling wealthy people out of their cars and beating them. You know, Pakistan right now with Imran Khan getting ousted, which may or may not have been like a politically motivated coup, like we saw in Ukraine in 2014, or in other places that America and the deep state has put their feelers into. How far we want to go down that rabbit hole, I'm not sure. But they're talking about running out of money, trying to get money from the IMF. Pakistan could be out of cash in the next 2 months. Food shortages, they're talking about energy shortages here in Europe, especially because blame Russia. Of course, it's Russia. No, it's your sanctions against Russia. So this is trickling out. And then you're saying a wealthy country like Australia is experiencing, say, 20% real inflation. And that's only 2-3 months after this Ukraine conflict, which seems to be the new pandemic, right, has started. So what do you see is going to happen over the next 6, 12 months, 2 years, 36 months, 3 years, you know, this short period, we're talking to 2025, with people who are literally living, most people are living with a couple of $1,000s in savings if they're lucky, right? Most people, you know, so what is going to happen to people in Australia, in America, in Canada, in these wealthy nations with everything that you see is happening?
What we've been saying for a while is to get your money out of cash, because cash, obviously, central banks can just print more and more and more of it. Whereas obviously, you know, scarce things like even oil, land, you know, coffee beans, that sort of stuff. Like, you know, grow your own veggies, have your own chickens, just decrease your reliance on what the system is actually producing and increase your reliance on yourself. Because things are going to get worse before they get better. Things will get better. Let me say that. You know, things are going to get better. I'm not like a doomsday prophet or anything like that, but we've got to go through this crap. And I mean, you know, as a good financial advisor, we used to say to people, you should set aside 10% of your income into savings or investment, right? So set aside 10% of your income, spend 90%. At the, like, we'll just do round figures. So at the end of a year, you know, like let's say there's 12 months a year. At the end of a year, you've basically got 1 month worth of income saved
1.2, yeah, a little bit more.
Right.
Great.
So, you know, if you have 2 good years, then you've got 2 good months worth of income. But then if you have a bad month, bang, you got to live on that, and it's going to take you another year to save that up. Right? You have 2 bad months, it's going to take you 2 years to save that up. So we've just gone through pretty well 24 bad months.
Yeah.
You know, if you have 6 bad months, whether it's an individual or whether it's an entire country, doesn't really make much difference. And let's face it, the governments aren't saving 10% of their income. They're spending more than they earn.
They're spending more as fast as they possibly can.
So one bad year means it's going to take them 10 years to get over this up. So they're going to have to increase the currency that's in the system, which is going to lead to hyperinflation. They're going to have to increase taxes. They're going to do lots of things like that, because this is the pain, this is the hangover, usually lasts longer than the drunken fun part. So, I mean, I'm not saying it's going to be terrible for a really long time, but you would expect that it's going to take, you know, maybe 5 or 6 years for things to get back to what we used to call normal.
And do you think it will get to some place of normality again, or there are people saying that this is the end of the Federal Reserve, meaning the US dollar as the global reserve, and that there is, like Ray Dalio saying, there is a changing world order, that the yuan, China, potentially coupled with Russia as a partner, you know, Russia is a stronger economy than it was 30 years ago, let's say, when they were literally bankrupt with the collapse of the USSR, where they had to, over the last, I think in 2016, they made their final payment to pay off the debt of all of the territories that were once the USSR, including the debt of Ukraine, by the way. Ukraine didn't pay their own debt. The Baltics didn't pay their own debt. Russia actually paid their debt off under Putin's stewardship. He's done very well economically. And what I love about Putin, you know, while I'm ranting on him, they had at the start of this Ukraine before half of it was stolen. $600 billion, half of their GDP, annual GDP, in reserve, in cash. Like you're saying, be a good steward of your money, save 10% a year, and then you'll have money for the tough times. He had half of his, he had 6 months of his, like if you earn your money annually salary, he had 6 months in reserve. Half of that was stolen, and that's why he changed to the ruble for payments in gas, right? You're not going to steal more of my money. He's weaponizing gas. No, he's being smart. You stole $300 billion in your currency that was his money, our money. I'm becoming Russian, mate. This is going good over here. I speak Russian now.
That's a controversial opinion. Go on.
Oh, mate, it is, and bring it on. Like I'm all about controversy, but I see. I'm backing Ray Dalio that the American dollar is going down and China is going up, and they have so much political conflict in America right now. You know, the divide between the two is ridiculous. And I don't necessarily love the Chinese model, although Ray Dalio is open to it. The Chinese model is pretty full on, in my opinion. But look at what they've done for their people over the last, say, 50, 60 years. How many people they've pulled, and not even people, but the percentage of their population.
Years.
Look what they've done, mate, pulling people out of poverty. Literally out of poverty with their industry, and America's going the other way. More people are going into poverty. There's more divide, not only racial, but political divide. And now the massive money printing that they've done, and they is meaning we're like the USSR days, we're satellites of America, right? Look what we've done. So what's your thought on that? Like, are we going to see a currency, a global shift, or like what Putin's saying, there'll be a multipolar world, no longer a unipolar world, and China and Russia and its allies, India potentially as well, potentially Brazil, the BRICS and more, will form their own more rising strength, while this Western US-led dominated financial system is going to decline. That seems to be what's happening, in my opinion. But what's your thoughts on
it? If you want to make billions of dollars, and if you want to if you want to be able to predict the future, like making billions is just being in the right place at the right time.
Yeah.
Right. And sometimes you get there a little bit early, but you just got to have faith and hang on. And that's usually what we do. We might be 6 months early, we might be 2 years early, but we're always ready to go when the next wave hits. So you just got to look back throughout history, and I'm going way, way back. Like you have a look at the Roman Empire and the Egyptian Empire and the Greek Empire and the Ottoman Empire, and these things, like these guys were the most powerful in the world. They were like this giant octopus that was straddled in the entire world, took taxes from everybody, had the biggest empire, and the average length of time is about 107 years. Maybe 200 years, 300 years, but Rome was going down for a long time before the fall of Rome. And one of the things that Rome did was actually debased its currency. They used to have gold, silver, and copper coins. But after fighting these endless wars, in Northern Ireland and Northern Europe, things like that, they started to run out of money. And they debased their coins by putting more and more lead in them. And people got upset then because their currency was worth less. People were rioting and the prices were going up, and the prices of togas and sandals and medications and things were rising. And it was obviously the businesses were putting the prices up because they weren't making enough money. Rome implemented price controls. Right? Oh, wow. Now, this has been done again and again and again. Like, US has obviously been the world's biggest empire for the last century or so. It's only a young country. It's only about 200 years old, similar to Australia. But they've been the number one for the last century or so, but their power is waning. As you said, the economic disparity between 1971, where the average CEO's wage was about 5 times what the cleaner earned. And now it's like 300 times what the cleaner earned. Yeah. So the economic disparity is massive, which is sort of like what happened in the French Revolution. You've got these super rich, super powerful people, and then everybody else living in poverty. Also what happened in Rome, also what happened in Egypt. And eventually people rise up, they get their pitchforks and they get their axes and they get their little flaming tiki torches, and they just go, enough's enough. Right. Yeah. I'm not saying there's going to be a French Revolution in the US, but there will be a lot of people who want to break away from the system. And maybe they'll start by going to other countries. Maybe they'll go and live in Bali or Thailand or something like that, where the tax system is more favorable, where they feel more wealthy and more in control. And obviously, people pulling the money out of the US dollar to put into gold, silver, Bitcoin, buying land, traveling internationally, setting up a foreign corporation. Yep. The more people exiting the US dollar, obviously the value is going to go down. Now, I wrote this in, 2006 when I put out my first book, saying that the US is on the ropes and China is going to be the new America.
Wow.
And people laughed at me. Yeah. So that was a long time ago, but I actually spent a month in China and looking at what was going on then, before they even got the Olympics in Beijing, and the amount of infrastructure that was going in, the amount of outsourcing that was going in, and all the money flowing from the Western countries, because we wanted cheap TVs, we wanted cheap iPhones, we wanted all this stuff. And now, like, when's the last time you saw something that was made in Australia? When's the last time you saw something that was made in the USA? Nothing.
No,
everything's made in China. Yeah. So, but the interesting thing is, and we've observed this as well, like, even when China became this massive economic powerhouse, only in the last sort of 20 odd years, and they've absorbed all this money. But the Chinese have also learned the lesson. They saw the Western world outsourcing all their labor to China. And they're going, okay, these companies are getting paid for basically doing nothing. Like, you're paying for the microwave and they're just delivering the microwave. They didn't actually manufacture it. They didn't mine the metals. They didn't do this stuff. So the Chinese have been outsourcing their stuff. And there's economies like, obviously, India is, the intellectual outsourcing capital of the world. And also Africa's another one, which is like China was 30 years ago. There's 1 billion people on the continent, and most of them are well educated. Particularly, like, you go to a country like Zimbabwe, there's 95% of people can read and write English, up to a high school level. 95% literacy, but also around about 95% unemployment. So they're very smart, they're very clever, but they're sitting around with nothing to do. And the average income is around about $2.70 a day. So if you're a smart Chinese person who's getting paid $5 an hour to make T-shirts or watches or whatever, you go, I can actually outsource this to Africa. And that's what we've seen. I've literally been in that country, right? And there's this massive hangar where these people are sewing blankets and clothes and things like that. And they're sewing on labels saying made in China. And I'm like, dude, like, we're in Zimbabwe. Zambia's just over there. How can you sew on these labels saying made in China? And the Chinese guy goes, oh, we own the land. We're Chinese. We own the land. So we say that this is China. I'm like, okay, that's some dodgy practices right there. Fascinating. But whatever. So some of the stuff that you're seeing that's made in China has actually been outsourced by the Chinese. And so we're going to see another massive inflow of wealth.
Business sense. I mean, why not?
Wherever the labor is cheaper. And right now,
exactly.
It's like China, but it's becoming more Africa. There's even countries sourcing oil from Africa because they don't have to go to the Middle East. They don't have to fight with people. There's plenty of labor force over there to build the oil wells and to work in them and things like that. And there's plenty of resources. They've got oil, they've got gold, they've got diamonds, they've got all this sort of stuff, lithium. All the stuff you want is just sitting in Africa. So there's going to be a massive shift.
I know China's been buying up farmland in Africa like nobody's business, right? To feed their own population. So growing it and exporting it back to China. I
mean, food is again, one of those scarce commodities.
Massively. And more. It will be. They're expecting and they're predicting food shortages right now. For Europe and in the UK. I watched another video this morning about energy shortages in the UK, and they're prepping the UK and parts of Europe for like rationing this winter. It's going to be a cold winter. You will not have enough energy. Blame Russia. But this guy was actually saying, like, the UK gets, it's in the, less than 10% basket of countries that they get their oil and gas from, the UK, but they're blaming Ukraine. The Ukraine conflict. There's like, no, guys, you guys have messed this up yourselves. Obviously, that's a part of it, but it's your sanctions that are hurting you. Anyway, that's another story. So, mate, look, it's fascinating. I think that what you and I are saying is the same, and you said it in 2006. China's on the rise and America's on the decline, but we are tied to that dollar. The whole world is tied to that dollar. And now with Russia and their sanctions, obviously moving away from the US dollar as the reserve currency for energy, gas and oil, and saying, no, you need to set up rubles accounts in order to buy our energy. They've already started to move away from the US dollar and again, the global currency. And then with the yuan, with China, Union Pay in China and Mir in Russia, which means world, it also means peace, same word for world and peace. I love that in Russian. They're joining forces and creating their own payment system because Russia's being kicked off SWIFT. And now all of a sudden, these superpowers are starting to combine financially, not just with trade, but actually in the financial system. So could it be that the world shifts gradually, that more and more countries are like, whoa, the Americas payment systems are going down, this Chinese predominantly, but with Russian backed, but China is the one. Maybe let's just move over to there. And there is a transition for those countries that aren't so patriotic to the American dream. You know, the Africas, the Asian countries, the Middle Eastern countries, because really it's only the Western countries like Europe and you know, a couple of satellite states over in the Pacific that are really, yeah, that are that patriotic. Do you think that these countries are just going to naturally go to the winning side and say, hey, look, I'm going to go over here because it's more natural and we could avoid a global financial collapse? Or do you see a global financial collapse coming?
Even the so-called global financial crisis of 2008.
Yeah.
Yeah, it was really the Western world that was affected. So obviously the US was the one who was doing most of these ninja loans. Yeah. And obviously they had the biggest fallout. So you had banks like Bear Stearns, you know, Freddie Mac, Fannie Mae, Lehman Brothers, banks that were like 150 years old, who literally just went bankrupt.
Yeah.
Wasn't so much in Australia. Obviously, yes, we had the stock market go down and people panicked and, you know, housing prices went off the boil and things like that. But what happened in Detroit was a house that used to be 750,000, you could now get for under 100,000. Like Crazy. They literally had 70 to 80% price drop. Imagine if you put down a 10% deposit for your house and you borrowed, you know, 80, 90%, all of a sudden your house is only worth the 10% deposit and you owe 5 times what the house is worth. Oh, like that was really, really bad. Yeah. But particularly centered on the US, it's kind of like the bomb site and then the crater sort of spread out to the rest of the world.
Well, they caused it as well.
Financial crisis. Yeah. The global financial crisis was affected the UK because the Bank of England was lending to a lot of the banks in the US, affected Australia and anyone who traded with the US, which obviously, you know, as Australians we did.
Yeah.
But China was massive. You know what they called the GFC in China? It wasn't the global financial crisis. They called it Go Forward China. Right. So everybody, with this collapse, everybody wanted cheap stuff, right? The stock market was down, property market was down, people were panicking, and you got to get your stuff from somewhere. So it led to a massive increase of the Chinese supplying goods and services.
Wow.
So, you know,
we're not told any of that.
No, their economy went spectacularly.
Really?
So I wrote the book in 2006 saying that there was going to be this massive crash. But again, didn't know what was coming out of it. But
you're early again.
Yeah, we're focusing on the Freddie Maes and Fannie Macs. And the US was actually saying, oh, you know, we're this much in debt as a government, as a country, but they weren't counting all the mortgage debt. They weren't counting all the student loan debt. And of course, that was
only the government debt, which was already off the charts. Yeah.
Yeah. So again, they were fudging the numbers. And when we actually exposed it a couple of years earlier and said, look, there's going to be a big fallout from this because they're borrowing money at an unprecedented rate. And over time, things have got to come back to normal. So that was a global financial crisis, but it was really only the English-speaking countries because the other countries who weren't trading with the US, weren't relying on the US, they weren't so affected. So again, like you imagine if we go back to ancient Egypt, right? And Egypt's bustling along and doing really good, and then all of a sudden the Greeks turn up and you go, oh my God, like now the Greeks have just obliterated all these guys and now the Greek Empire. If we could live long enough, you know, we watched the Romans walk into Greece and knock out that empire. So we're living through that stage where we have been in this US empire, this global empire where the IMF and the US dollar was almighty.
Yeah.
And now we're watching the change. We're actually watching this thing change live. And, you know, maybe, as you say, maybe we'll go back to this sort of multi-party sort of system. Or maybe, you know, people would hate if China stepped up because they don't like the communists. But again, that's brainwashing. If you live in the West, you hate the communists. If you've grown up there, you think it's the greatest system in the world. And as you say, it's lifted so many people out of poverty.
Yeah.
And again, living under a dictator. Well, you know, I spent a lot of time in China and like you hear the stuff when you're in the West going, oh my God, the Chinese, you know, if you're a pickpocket, they shoot you and they do this and they do that. Like, well, what would you do if you were running a country of 1.6 billion people? You know, you can't fill up the prisons, right? And how much does it cost to send someone to prison in the US? It's about $30,000 to $40,000 a year to put someone away and guard them and feed them. Wow. Whereas in China, they're just like, okay, you committed a capital offense, we're just going to shoot you. And then we send the bill for the bullet to your family. And we, as Westerners, we go, oh my God, that's so cruel. But economically, it makes so much more sense. And if you take the human emotion and the brainwashing and the way you were brought up out of the equation and just go, there's a little company over here called China. There's a little company over here called US. This one's been borrowing money at an unprecedented rate and saving nothing. This little company has been saving money and running profitably for the last 20, 30 years. And they've got plans for what's going on in the next 30, 40 years. Yeah. So which company are you going to invest in?
Exactly.
It becomes not an emotional decision, but a financial one. You can take the human emotion out of it. Maybe you don't like Indian politics. Maybe you don't like Russian politics. Maybe you don't like Chinese politics. Who cares? Those systems are running more efficiently. And the US has just gotten too fat and too bloated. So who's going to be the winner? I really don't know. In 2006, I said it was going to be China. China has now got more billionaires in China than in the US.
Wow.
Right? If you're counting, like, this is again controversial, because the people in Taiwan don't like to be called Chinese.
Yeah.
Right? The people in Hong Kong don't like to be called Chinese. But China lays claim to both territories and says, okay, we own that. If you count those territories as well as mainland China, they've got more money than the US. They've got more billionaires than the US. Yeah. They are actually the #1 economic power right now.
Already.
And
wow.
Back in the sort of late 70s, early 80s, we thought, there's going to be a war between Russia and US and someone's going to blow each other up with nuclear weapons. That never happened.
Yeah.
And even the little skirmishes that we've had nowadays have mostly been about the money, and they've mostly been fought with money. So the US wasn't going to drop a bomb in the middle of Russia when they could just turn off the money supply. And they go, that'll teach you bastards. We're not going to blow you up. We'll just cut down on your food and your money and the way you actually live and gradually starve you to death.
Yeah.
But guess what? Russia's we're going to plant our own potatoes and we're going to make our own cars and we're going to do this. So you're seeing this kind of split.
Yeah.
But the US has been weaponizing the US dollar for so long.
Absolutely.
They did the same thing with Saddam Hussein, Gaddafi, who he wanted to sell oil and get gold for it. Whereas strictly speaking, he was supposed to sell the oil for the US dollars and then use US dollars to buy gold, right? Which obviously buying both the US dollars in between helped keep up the price of the US dollar. The moment he starts trading oil for gold, the US dollar would go down in value, which would cause a massive impact to their finances. So, but now they're devaluing their own currency. So it's amazing to watch this stuff and just go, holy crap, we are witnessing literally the fall of one empire and the rise of another empire. And maybe, as you say, we go back to a feudal system and every country will look after themselves. I don't know where it's going to end up. But
the strength of the US dollar...
The more you can rely on yourself, the safer you're going to be.
This is where we want to transition, because in any exchange of great superpowers, there is going to be some casualties of war. Caught in the firing line. That's us. It's the average people that are living day to day, which is, the 99% of us. We're the ones that are here seeing the 20% inflation, not the bullshit 3% on the paper. We're the ones that are, being told ration your energy and food shortages may be real, which again, they're already happening in some developing nations. So the remedy here, your prediction in September 2019 still holds true today. Tell us about what you see. And again, let's talk to Bitcoin here, but you did mention gold, silver, Bitcoin, land, and other scarce commodities. What are you recommending for your clients, and what are you doing personally? What would you recommend for us to get through this period of transformation of the US potentially going down? I wouldn't say potentially, and China coming up. What do we need to do to prepare just to get through this thing and prosper? A lot of investors out there, last piece here, they're saying what to do. Like, I watch a lot of guys on YouTube, what to do with your money to, make sure that you don't lose your money. Most people are like, man, I don't have money. I got enough money to feed myself, right? I'm not worried. I'm listening to these guys saying where to invest all this money. That's great, but I've got a few $1,000 here. I maybe got my house, or I got a car, or I got like a little bit of change in the bank. Again, that's the majority of people, mate. Unfortunately, that's the majority of people. What are you recommending to people that to get through this time? What's the best thing that they can do?
I mean, you can't see out the back here because the sun's going down now. But I've got half a dozen chickens in my backyard.
Nice.
Right? And I've only got a very small backyard. It's maybe 5 meters by 10 meters. It's not big. I've got 6 chickens in there. I'm growing my own vegetables and things like that. Like, I can't feed the entire family, but I'm just reducing my reliance on an external source. Because let's face it, the central banks control the money. They control how much is in supply. Yeah. And we've lived long enough to see inflation. I mean, you remember when you were a kid, 20 cents was a lot of money. You go and buy a big bag of lollies, right? Yeah. $1 was oh my God, $1 was a fortune. But if you had the dollar from when you were a kid and you stuffed it under your mattress and you pick it up as a 30-year-old man, you go, it's not even worth anything anymore. Yeah. You know. So you saw my post earlier today where I was talking about, the coins used to be made out of silver.
Yeah.
In the 1960s in Australia and in the US, when the currency was actually backed by gold, the paper dollars were backed by gold, and the actual circulating currency was like 80% silver or 99% silver in the US. And the silver and gold has held its value, but the paper money hasn't. And because that's the only weapon they have, that's the weapon they used in the Great Depression and the GFC, and we've seen 40% of all US dollars in existence were created in the last 2 years.
40%?
Right? So is it any wonder that we're saying inflation's probably closer to 20 or 30%? Because they've increased the money supply by 40%. So forget about this 8% thing. Like it just doesn't.
It doesn't make sense. Like
if you double the amount of money in circulation, then the prices of things are going to pretty well double. It's easy math.
It's simple math.
Be a rocket surgeon to figure that out. So, but again, there's things that the central banks don't control. So they can't control gold, they can't control silver. Obviously, those things can be bought and sold in any country in the world. You could literally have an ounce of gold in your pocket. And someone, even if they don't speak English, if you're stranded in sub-Saharan Africa or the Middle East or bloody wherever, in Turkey, people know what gold is worth.
Yeah.
Right? And they, maybe not the guy at the local 7-Eleven will give you a tank of gas for gold, but somebody out on the street will. So it can be used. It's a little heavier. It's a little harder to unload.
You're talking about gold coins, gold and silver, physical gold and silver coins,
gold bullion. Yep. So absolutely having that is a store against inflation and always has been. So again, going back to ancient Egypt, right? Ancient Rome, ancient Greece, an ounce of gold back then would actually buy a man a pair of sandals, a tunic, a hat, and a sword, right? Basically a suit.
Cool.
Okay. Now, an ounce of gold in 1930 would actually buy a man a nice suit, right? The price of the suit was about $10 US. So imagine you're holding the ounce of gold in the 1930s. I'm holding a $10 note. And then we wake up 100 years later, an ounce of gold will still buy you a suit. My $10 is not going to buy a tie, right? So for hundreds and hundreds and hundreds of years, an ounce of gold would still outfit a man. Right? Or a woman, but maybe women's clothes cost a little bit more. And again, silver when we say silver has gone up in price by over 100%, well, really has it? Or have they just increased the amount of paper money that you need?
That's the thing, compared to what, right? Like if you're comparing it to the dollar, that they just put 40% more of that currency, you can't really, it's not apples and oranges. It's not apples and apples. You need to, like you said, be comparing that to the buying power of stuff that I need. Roman days, I get a suit. 30s, I get a suit. Now, I still get a suit. What's gold at the moment? Exactly. What's the price?
Like almost 2,000.
2 and a bit. Yeah, something like that, right? So $2,000, you get a nice suit for $2,000. Yep. So you're saying
shoes and socks included,
mate, everything you need. So look, you can go away from now if you've got a little bit of savings in the bank, and we know that the buying power of that actual money. I was going to say physical money, and then I was like, it's not even physical anymore. It's ones and zeros on a computer screen, right? It's got worse. It's not debasing by putting lead in anymore. It's just like chuck a couple of zeros on that one. Exactly. So easy to do. So you're saying if you've got some extra cash there, get out of cash because it's only going to get worse, and actually buy things, because if shit gets crazy, and I think it's going to get crazy, if shit gets crazy, like you're saying, if I go to a guy and say, this is real gold, check that out, I need to get food for my family, how about you swap me, you buy me some food and I'll give you this gold and everybody's happy. Any smart man looking around on the street is going to be like, let's do this thing, especially with those that have still got some money to buy food. If it gets to that point, they're going to trade that. The money will be worth less, but average people now, how much is one little gold coin? You can get them for $50, $100?
Depends.
Yeah, it depends on the size.
If you're buying by grams, but an ounce gold coin is still going to cost $2,000.
Yeah. But little coins, okay. I was buying them years ago. Like I was buying $50, $100 for these little like gold coins, like physical coins I can put in my pocket. And these are sort of like you're saying, we can be using these on the streets. If you've got more money, having physical gold, but like bullion, bars, makes more sense to store that wealth. But for using money, and you can actually get silver coins, gold coins. Now, what about, and I'll come back to the point about chickens and having less reliance on the actual system, but what about Bitcoin? Because that was sort of where we were coming into this. What's going on with Bitcoin, mate? It's on a computer. It seems to me to be manipulated by whales, people who are pumping and dumping this crypto scene so that all of the small investors freak out, sell, they buy low, pump it again, make another crash, everyone freaks out, sells again, they buy more. Is that happening, or is Bitcoin really the decentralized freedom that it is being touted to be?
Well, yes and yes.
Okay. So you're big on crypto, eh? You're long on crypto. It's the future.
Well, some crypto. Right?
Okay.
When I first saw crypto 7 years ago, well, actually, it's more than that, 10 years ago now, someone showed me Bitcoin and said, "You're a financial advisor, you'll get this." And I looked at the Bitcoin and just went, "No, I don't get it. I don't actually get it. I don't understand it." And a couple of years later, someone showed it to me again. And by that stage, like Bitcoin was about $300 or $500. Ethereum had just come out. And there was a few other little projects like IOTA and this sort of stuff. So I looked at crypto and went, oh, it's not just Bitcoin. There's actually like a little tiny stock market. And you look at any stock market, any country, anywhere in the world, and there's good, solid companies, and there's a lot of crap, right? And sometimes the crap goes up and down in value. And like we were talking before about, when Google dropped by like 90%, Apple and Microsoft dropped by 60 and 80%. But at the same time, like the companies who were supplying your fuel for your car, the companies who are supplying your medication, the companies who are supplying your groceries, those ones didn't drop, right? Because they make profit week in, week out. It's if the economy turns sour, you're not going to buy a new iPhone. You're not going to buy a new Microsoft product. You're probably going to cancel your Zoom subscription, but you still got to eat. And grandma still needs her medication. We still need fuel for the car. Even if you sell your car and you start taking taxis or Ubers or whatever, somebody's going to be using that fuel or heating the house. So there's some companies that are just always going to be there. And again, Bitcoin I refer to as digital gold because it's in finite supply. There will only ever be 21 million Bitcoins ever in the world. They can't make any more. You can mine them. And sure, in the 1860s, you could walk through a gold field and just kick your toe and you'd pull up a bit of gold. Right? But after all the surface gold was taken, then you had to start digging down in big pits. And after all the miners who were like, digging down their own little pits that they owned themselves, that got it even more scarce. And so now you have to dig a hole that's like 800 meters deep, sometimes, 2,000 feet deep. And you have big trucks to try and get the last bit of gold. And the harder it is to get the gold out of the ground, obviously, the more the value goes up. So Bitcoin's got that halving effect built in because Satoshi, in his infinite wisdom, knew that computers get faster and faster every few years. The iPhone that you got in your pocket is more powerful than all the computers that existed on the world at the time of the Apollo moon landing, right? So, back in the day, you could mine Bitcoin on your laptop. Now you can't. Now you need specialized equipment. You need big banks of computers, things like that. And in about 18 months' time, the reward for mining Bitcoin is going to halve again. So it's going to become twice as scarce, right? Which is, again, similar to gold and silver because no normal person can go out and dig and find gold and silver these days. You need to have massive amounts of capital, massive amounts of equipment. So, and the more we dig down below the surface and we have these massively deep mines, silver and gold, again, more scarce, going to become more valuable. And if the central banks are printing money like confetti, then of course the price of everything's going to go up. But people are still going to flock to these scarce commodities, particularly ones that have held their value for centuries.
But Bitcoin hasn't, and it's not a commodity. It's a new technology that is completely digital. How is it then being likened to or in the same category as things like gold and silver and land and these actual physical things that I can put in the bank or go away and do something with? How is Bitcoin now in the same conversation as that? I get the 21 million and all of that. They can't, you can't. It has to go up in price. But fill me in here. I'm missing the point though. Like it's still digital.
Yeah, even with stocks, right? Like there's a company like Apple. If they want to do a capital raising, they can print more stocks. Right. You got companies out there who do stock splits, and Microsoft got up to like $300 a stock, and people went, "Oh, I'm not going to buy that. It's too expensive." And they said, "Well, how about we make the stock $150 instead of $300, but you need to buy twice as much. And people went, oh yeah, that sounds like a good deal. It wasn't really. It's just like a psychological number, right? I mean, I remember buying gold at $300 back in 2001, I think it was.
Wow.
And I was thinking, gold's expensive, man, like $300. And then like in the next 12 months, gold went up by about 10%. And I was like, this is bullshit. So I sold my gold and I started buying stocks and shares that would go up like 30 or 40% a year. But of course, they go up too high, they come back down. And over the time, gold has just ticked along nice and slowly. So when we say Bitcoin is digital gold, it's because it's scarce, you can't make any more of it, and it's getting harder and harder and harder. And that halvening will continue till the year 2140 is when the last Bitcoin will be mined.
That long? Right? Oh, I didn't realize it was going to take that long.
Like we're both going to be dead by then. Like 2140.
Speak for yourself.
Maybe another 100 years, possibly.
Who knows?
But it's that scarce commodity nature of it. But the fun part is that, like 20, 30 years ago, if I wanted to show you a picture of my cat, I would have to put it in an envelope and send it to you through the physical mail. If I wanted to send you a letter, I had to write it down and send it to you through the physical mail. Now we've got email. So I can send you a picture like that. I can send you a letter like that, right? We can have a video call. Like imagine doing this phone call 20 years ago. What it would have cost?
Yeah, well, that's right.
Flown internationally back then. Yeah. So the technology has now been transferred over to money. What they're calling it Web 3, right? Because Web 1 was basically just, a stock standard page you could go and look at. I could go and look at. That's about it. Yeah. Web 2 was when we started to have the things we could actually interact with, blogs and social media and that sort of stuff. So you could become a creator as well as a consumer. And Web 3 is going, okay, wouldn't it be great if I could actually have an ounce of gold and I could send it to you via email? So even when I looked at Bitcoin again back in 2015, and someone said to me, there's this Bitcoin thing, there's only 21 million Bitcoin. I'm like, yeah, so what? They said, well, it's the same value everywhere in the world and you can email it to people. And back then, like we had staff outsourced. So we had people in, where were they? China, Indonesia, Africa, and Fiji, right? And some of these people had a bank account. So we'd transfer money in the bank account and it would cost like $10 or $15 to transfer the money. Some of them were unbanked, right? A lot of people in Indonesia and some of these emerging economies, they don't have a bank account, right? So you're talking to a 50-year-old person who's never owned a bank account in their life because banks are too expensive and their currency was unstable. So we try and send this person $200 via Western Union. And it would cost $39 and they have to go to the Western Union office with their little receipt and they pick up the cash. So I'm paying sometimes 10 or 20% of the value just in bank transfer fees. Crazy. And someone said, you could send $10,000 worth of Bitcoin to someone for about 5 cents. And I'm like, oh, okay, tell me more. Or how do they turn the Bitcoin back into money at the other end? Oh, they can do that localbitcoins.com. They can go into here.
You can get a card now, just spend it.
Yeah. Exactly. So it was really the thing that attracted to me was I could email it instantly. I could send money to you instantly and it would cost a fraction of a cent. Because if I'm sending you $1,000 in Bitcoin or $100,000 in Bitcoin, it costs the same amount. I can send you $1 billion.
There's a lot of utility in it. I agree with that. There's a lot of utility. And we're just talking Bitcoin and not even like the cryptocurrencies that are designed for payment transfers. And, they're not all equal. Like you said, some are good and some are not so good.
Yeah.
But what about this idea of manipulation? And can gold and silver markets be manipulated? I'm pretty sure that they can through, big players as well. And likely there have been over history. But history shows us that regardless of any manipulation, they're always going to hold their value, or always have held their value, versus the money printing system or the debasing in the Roman days, but what we've got now. So what about Bitcoin? Like, is it an inevitability because of the nature of it being like a digital gold that it will increase in value versus spending power and versus the fiat currency?
Yeah, I think the important question you asked there is about the manipulation.
Yeah.
And even though gold is an asset that exists in every country in the world, and everybody pretty well knows what the value of it is, it can still be manipulated, right?
Yeah.
So 1931, 1933, whenever the Great Depression was in the US, and Roosevelt issued an executive order because the country was going bankrupt. Banks were closing down. There was massive unemployment. Like 1 in 4 people had lost their jobs.
Crazy.
And so they said, okay, yes, the US dollar is backed by gold, But we've issued an executive order that says everybody has to hand their gold back to us. Holding on to gold privately is now a criminal offence, punished by 10 years in prison or $200,000 fine. And the frightened citizens all handed back their gold. And what they get, like $10 an ounce back then. And then the government collected all the gold and went, okay, now we're going to reback the currency, but the gold is now going to cost you $25 if you want to come back and get it. So they artificially inflated their currency. They artificially took advantage of people with the gold price. And yes, that can happen again. I mean, in the 70s, if you have a look at the silver price through the 70s, and again, because I'm throwing historical facts out of there because I wasn't prepared for the question, I should look it up. I can't remember the name of the company, but in the 70s, there was a conglomerate who actually manipulated the price of silver to go up by like 300%.
And it was 71, they took the 71, they took, just for historical context, they took the gold off the dollar. Off
the gold standard.
So during that period.
It's been back like nothing.
Then it was thin air.
Yeah, the British pound, I call it the pound sterling because it was backed by sterling silver for 300 years. And then they dropped theirs and the US dropped theirs a little while later. But interesting fun fact, like if you were living in England back in that period, there was negligible inflation. It was less than 1% a year. So if your grandfather had paid 3 silver coins for his house when he was a boy, your grandchildren, 100, 200 years later would pay the same price for the house, maybe up a little bit. There was almost zero inflation for 300 years while they had
until the 70s. Until the 70s.
No, when they dropped the pound sterling. So
when was
inflation
that?
Is God, good question. I'll look that up and get back to you.
Get back to us next episode.
I mean, they went from 100% backed by silver to 50% backed and then 10% backed and that sort of stuff.
But in the period that it was fully backed, they had zero inflation. Same price, 300 years. And as soon as they took it off the scarce commodity that had real, and I'm going to use the word tangible value rather than physical value, because again, Bitcoin is not physical, but it is tangible in, like you were saying, the utility of moving money across the world is very tangible. I say money. So the tangible value, as soon as they took that off, inflation went crazy because they started printing money.
Absolutely. And every empire that has started debasing their own currency has eventually fallen. Every single fiat currency in the world has eventually gone to zero. The Chinese did it in like the 1300s, 1200s, 1300s. They started printing paper currency and they printed too much and the currency had to get revalued. So maybe we'll have like a US dollar Mark II when this one is worth less, right? And they'll start, here's a new one. Joe Biden, I read today, Joe Biden has issued the executive order to the US for the issuing of a central bank digital currency.
No way,
they've already got one in China. They've already got one in China. They've got one in India. The Chinese led by example and said, we're going to pay all the government officials with this central bank digital currency. And it's programmable money. So it's not just ones and zeros on your computer screen. It's actually, if you don't spend this money in 2 weeks, it's going to disappear.
Yeah. Or you can only spend it on this product and that product, but not this product over here.
Exactly.
Your card won't work. I want to buy beer. Your card won't work. You've been drinking too much beer lately. It's like, you bastards. That's scary.
Yep, they can program the money for your own protection.
Yeah, exactly.
So
and for carbon
emission
and protecting the environment and all this woke agenda that they're pushing on us.
Yeah. Every time you want to fill up your car, they say, you're burning fossil fuels because you've got a fuel car. You're going to have to offset by carbon credits, or will limit you. So you can only buy $100 worth of fuel every 2 weeks. So programmable money is got people who understand it are very, very frightened.
And is that based on blockchain?
Don't understand it are not frightened.
Yeah.
Well, not really. Not really.
It's because it's
controlled and manipulated by the government.
Yeah. So blockchain, but is the technology blockchain? Because you can have a controlled blockchain, can't you? Or blockchain means that it's in different wallets and computers.
Yeah, potato, tomato. I wouldn't call it a blockchain. It's strictly speaking, it would be, but it's centralized. It's
centrally controlled. Yeah.
Whereas the Bitcoin, it can be controlled and manipulated. We saw that, back at the start of May, when I won't say their names, but there was a couple of huge fund managers in the States, and these guys borrowed hundreds of billions of dollars, bought a lot of Bitcoin, and then dumped it onto the market and sold it for a loss because they were shorting the other side. Then they borrowed the UST or the Terra dollar, and then dumped that onto the market faster than the algorithm could actually pick it up. So they liquidated Luna, they liquidated Terra, they liquidated Bitcoin, and meanwhile these guys are just laughing. You know,
crazy.
I mean, we had a similar situation back in the days before Bitcoin. It was 91, 92 when George Soros actually took a massive $10 billion bet against the Bank of England. The Bank of England had been going for hundreds and hundreds of years. And he just decided, hey, because I can, I'm going to liquidate this bank by borrowing their money and then selling it on the open market. Now, George Soros personally made $1 billion in one day, right? Which was a lot of money 30 years ago. Now, everybody else lost about $3 billion, but he did it because he could. And he saw a gap in the marketplace and went, I could just be a real prick and make a lot of money, right? Yeah. And if there's something that you can do to shortcut the system, people are going to try it. And this is a problem. Obviously, since Soros did that, they've put in more rules and regulations. Since people used to manipulate their own stock prices and things like that, we only have to go back as so far as OneTel and what was that one called? Enron and WorldCom and these sort of guys, you know, buying up their own stock to inflate price or telling people it was so wonderful and then actually selling out and leaving everybody else holding the bag, right? Now, if you do that in the stock market now, you'll go to prison.
Right. And so will crypto be regulated to stop guys like these two billionaires? Are we going to now regulate crypto in order to protect the average investor? Is that where it has to go?
Well, the government, again, is always trying to protect you. But they've got
because they love us so much.
Yeah. So
love to control us.
We'll bring in a central bank digital currency, and we'll bring in these laws and regulations. So even in the document that Biden issued, and he wants this to happen, you know, in the next 180 days. So basically, you know, like by Christmas, the US is going to have their central bank digital currency to protect people, and they're going to stop other people from issuing a currency. Because let's face it, Bitcoin flew under the radar for so many years. And the first people who saw it just went, oh, it's for geeks, it's for nerds, it's for drug dealers. None of the politicians took it seriously. None of the central bankers took it seriously. Until now, it's so widespread that they can't control it.
Hedge funds are holding Bitcoin now. Like,
I know.
Institutional investors have entered this marketplace in a big way. It's
Jamie
real.
Dimon, billionaire hedge fund manager who, like, years ago, he said, oh, it's a big Ponzi scheme. It's all going to fail, blah, blah, blah. Now he's one of the biggest owners of Bitcoin on the planet.
Yeah.
All right.
And this is my thing, though, are these, go.
I was going to say, like, the governments can't control it. So the best they can do is say, okay, we're going to put in some rules and regulations around this thing. Like, the governments can't really control the internet. In China, yes, they've got the great firewall. But in the US, they can't really control the internet. If you want to share smutty pictures or if you want to send wire transfers and buy drugs and things like that, you can. There's a way. You use a VPN or Silk Road or whatever. You can do it. The only way for them to control the internet is to shut down the entire internet. And of course, then no one can bank, no one can work, no one can do any of those things. Yeah. So they're going to shoot themselves in the foot. So the US can't stop people from buying and selling Bitcoin and trading Bitcoin. But what they can do is say, we're going to bring in some rules and regulations like what they did when they said it's now illegal for you to hold gold in the 1930s.
Yeah, exactly.
Obviously, there were some people who hid their gold away and just didn't tell anyone. Hopefully the neighbours didn't report them and the sniffer dogs didn't find the gold. So some people will be using Bitcoin and in anonymous wallets and things like that. And some people will go, oh, you know what? I'll have the US currency. I'll have the digital currency. But the government is going to control that. They're going to manipulate. So if you work for someone else, you have to get paid in cash or in a central bank digital currency, well, okay, sure. But by all means, get away from that control as much as you can. If you can just save 10% and put it into a decentralized currency that's not controlled and manipulated by the government, then absolutely do that. I mean, obviously, we're going to see spikes in stock prices. We're going to see spikes in crypto prices because at the moment, it's illegal for someone to manipulate that market because there's no law against it. So they can jump in there, they can make the price go up to 75,000 and drop back down to 30,000. And that's just par for the course.
What just happened in the last few months.
I know. But the government can also do that. Central banks can also do that. Like Senegal, 1994, I was speaking to a guy who was, his parents had saved up for years and years and years. He was very, very bright. His parents were going to send him to the US to go to university because there wasn't a lot of opportunity in Senegal. You can be very well educated, but there's no jobs going. And in 1994, they had the money saved up and they were about to send him overseas. And the Senegalese government needed to borrow some more money from the IMF. And they said, hey, look, we need some money. And the IMF said, yeah, we'll give it to you, but you must devalue your currency by 50%. What? And they were like, holy crap, right? And it wasn't just Senegal. There was a few other countries in emerging economies where the IMF has done this to them. And so all of a sudden, like say, for example, he had $50,000 saved up to go to the US and go to university.
Now it's worth 25.
Overnight, one day, 24 hours, it's worth 25. And he's like, holy shit, we're going to start saving again and again and again. Governments can do this to the currency. You know, we've seen currency.
And beyond governments, it's the three-letter organizations that are stronger than the governments. IMF is the center of this financial dictatorship, because that's effectively what we live under, is a financial dictatorship. We're all like watching the puppets of the politicians, but these guys are up there controlling everything for real.
Absolutely. I mean, who's the was it Rothschild, Baron de Rothschild? Said, I don't care about who runs the country.
As long as I can control the monetary supply. Yeah, exactly. And that's the truth of it. All right, so long on Bitcoin. So you reckon regardless of the manipulations, regardless of the ups and downs, if you looked
where else are you going to hide? Like, it's going to be manipulated, but every currency is manipulated.
And gold and silver is manipulated, like you said, but less so than the fiat currency, especially because these bastards have printed 40% of the new currency in the last 2 years. So that is a massive manipulation, well beyond any whale pumping and dumping, Bitcoin or gold and silver. That's incredible manipulation. A central bank digital currency is the ultimate manipulation in that you can't buy groceries or beer or travel further than your 30 kilometers around your house if they choose it so. So it's like the lesser of two evils. So you reckon 5-10 years, if I just, because I had quite a bit of Bitcoin, I did have quite a bit of gold, and when I launched Permacare, I invested like 100K of my own money trying to build community on the Gold Coast, funded it myself and had to sell my gold, haven't bought it back, but I'm investing in land instead. But I've got probably 3/4 of my money out of, I say Bitcoin, but crypto. I've got like 10 different cryptos, but I'm leaving enough in there just to see what happens. Like I just want to be in the market because I'm either going to lose it. And if I lose it, it's not a big deal. Like I would like the money, but if it goes where some people are saying it's going to go, then it could be worth something really, like in 10 years time, that can be my retirement fund, let's say.
Yep.
What do you think if I extrapolate 10 years into the future, by 2030, the Great Reset, is 2030 going to be Bitcoin is at $500 or something along those lines? Is it going to keep going up long term like we've seen gold do over however many, centuries?
I'm been in the market long enough and wizened enough to not usually provide a prediction like with a definite date or with a definite price. Yeah. Like I'll say something can go up, something can go down, and we'll say this is probably what's likely to happen because of what the government's doing, because of what's going on. But recently, for the first time ever, I actually put out a bet and said, if Bitcoin is not $100,000 US by 30th of June 2024, I will buy everybody who reads our blog a Coke. Right? That was my price prediction.
100,000 by the end of 2024.
By June 30th, 2024.
So end of financial year.
Time.
June 2024.
I'd so that's put a date and a price on it.
Mate, that's interesting. Why? Why have you said that it's going to be 100K when it's now at 30 in 24 months' time? What are the indicators? What's your feeling on it?
There's something called the stock to flow model. And anybody who's investing in gold and silver will be familiar with, like, there's a certain amount of gold under the ground and there's a certain amount they can dig out every year. And again, back in the 1860s, anybody could just take a shovel and chip a bit of gold off. But it gets harder and harder and harder and harder to get. Yeah. And so that's why the price keeps going up, because yes, there's still some gold under the ground. There's still some silver under the ground. But every year it gets harder and harder and harder to get. And same thing with Bitcoin. It's got this halvening built in. Every 4 years, the reward is halved. So the stock to flow of Bitcoin is what we look at. And again, comparing it to other scarce commodities like gold and silver that can't be created, can't be inflated. And looking at the price and saying, if you follow the stock to flow model, it'll show you that I'm on a very safe bet. I'm not going to have to buy a Coke for anyone.
Interesting.
Right? But there's still going to be fluctuations. I mean, like, Bitcoin.
Yeah, but you got to ride the storm, right? Yeah, but if you're willing to.
Twice that. Yeah. Like if again, like say with the Microsoft and the Apple, right? So if I told you in 1999, these stocks are going to drop by 60, 80%, you might be going, holy crap, I better sell out, right? And a lot of people obviously did when the price started going down. But if you knew the future and where those companies would end up in the next 20 years, would you be selling? Hell no. You'd be buying more and buying more on the way down, because you don't want to say, oh, look, yeah, I sold all my Microsoft stock for $20, back in the middle of 2000. And what is it worth now? Right? Plus the dividends and the earnings and all that sort of stuff.
So are we on the way down? Is Bitcoin on the way down to the point where you would be like, start moving into the market with Bitcoin now, knowing that your prediction in 24 months is going to be 3 and a bit times the price that it is today?
Absolutely. Absolutely. I mean, obviously, general advice only. I don't know your own circumstances. I don't know the circumstances of any people listening. But I'm buying it like as fast and as frequently as I can. And again, the fluctuations. So, if you're putting in $10 a day, you get a little drip feed Bitcoin app on your phone. Yeah. You put in $10 a day. Obviously, when it's 60,000, you're buying a little tiny bit. When it's 30,000, you're buying a lot more. And all the way down, you're buying a bit more. But you're just getting
dollar cost averaging.
Absolutely.
Yeah,
absolutely.
But how far is it going down? Like, I've seen people, experts on YouTube. You got to trust the experts on YouTube. By the way, this show will be on YouTube, and if you're watching on YouTube, make sure you subscribe to another expert on YouTube. But they're saying it could go down to
qualifications of these people, man.
That's very true.
On TikTok who's saying, "Oh, it's going to go down to $8,000," and like
I saw 3,000. So you tell me, I'm seeing so how far is this thing going down, man? I'm sitting at 30. Like the last week, that's why I reached out to you. I was like, man, do I need to sell? You reckon that's it? That's the bottom. 30's the bottom.
Yeah. Well, maybe 28, maybe 29.
But around this, that's fine. But why? Why?
It's dropped down to this level. It's been there for a while, and there's obviously people who are trying to push it lower. And these guys, obviously, I won't mention their names, fund managers in the US. Who tried to dump the Bitcoin because they were taking the opposite bet. They were making money when it goes down. But what happens? Bitcoin got down to 30,000, and you've got the government of El Salvador who's buying Bitcoin, and they're actually selling bonds on the open market to raise money from their citizens to buy more Bitcoin. You've got the Central African Republic who's buying Bitcoin, saying this is going to be our currency now, because obviously living in the middle of Africa, they saw what happened with Senegal. They saw what happened with the Ivory Coast. They saw what happened with Zimbabwe. And they're going, we don't want to be controlled and manipulated by rogue governments, either our own or the IMF or the US dollar. We want to have our own stuff, and we're going to back it. And obviously, yes, you can back a currency with gold, but gold is very hard to transport. You imagine,
and you get shot when you do it.
You're trying to leave a country with gold or silver. It's very heavy to carry, and it can be taken by someone. But if you've got Bitcoin on your phone
or in your head,
hide it in the secret app. Yeah, in your head or on your email. It's easy to transport. You can literally cross the border with $1 billion if you had that much money, and no one can steal it from you. You can't transport $1 billion without having armed security guards and bulletproof trucks and all that sort of stuff. So this is, again, it's the internet of money. It's Web3, where we can actually send value the same way that we send emails and
cat
letters
videos.
And cat videos and that sort of stuff.
Social media. All right, so 30, 28-ish. We're at the bottom of the market now, in your opinion, on Bitcoin. And over the next 24...
government's buying it. It's not just the big fund managers buying
But here's the thing. Gaddafi got hung, and Saddam Hussein got hung because they wanted to take their currency, like El Salvador's
Scotty, because they had weapons of mass destruction.
Yeah, what a load of shit that is. Yeah, and we did land on the moon once, right?
Yeah.
But either way, is El Salvador now going to be targeted by this flailing death throes of economy that is the US, like they did with Gaddafi and Hussein and Central African Republic? Are they now going to be, attacked because they're trying to do what these guys did with gold, but with Bitcoin?
Well, maybe you Google some of the images of what actually happened after the US invaded, and Gaddafi and Hussein,
and how terrible the country became.
Have a look for the pictures of the US soldiers stacking gold bullion into the back of trucks, and we're talking thousands of tons. Thousands of tons. The US was going in there looking for weapons of mass destruction. What they found was gold, because gold was actually destroying the US economy by not using US dollars. But you imagine going into El Salvador and trying to steal their Bitcoin?
Yeah, exactly.
Oh, dear Mr. President, where are you hiding your Bitcoin? Forget about it.
Tell us your 12 words.
And he's going to have them ripped up and backed up like they were the 11 secret herbs and spices. Like, you will never, ever find it. So there's no way they can actually go in there and steal all that stuff.
Crazy, eh?
You know, it's an economic decision because
Bitcoin could be literally the future of freedom. If it gets embraced in the way that you're saying it's embraced, the fact that you can transfer it anywhere, the utility of it's there, the built-in 21 million scarcity is there. It cannot be manipulated to the point of central bank digital currencies. Only the whales can do that, but they can do with that gold anyway. It's literally like a digital gold is what you're saying. And therefore, inevitably, with the collapse of this financial system, current US dollar financial system, where are you going to put your wealth as this 40% inflation goes crazy? Gold, silver, or Bitcoin? And you're sort of saying it's inevitable that this has to go up. It has to go up in value. Gold's going to go up, silver's going to go up, and I believe that both of those will truly go up because it has always been the store of wealth. But now all of a sudden there's a rogue player in your head, on your iPhone, in your computer, that is Bitcoin, that has more utility. But as long as people, and as you said, governments are now doing it, not only financial institutions like hedge funds and whatever are buying it, the belief in it, because you only love gold because everyone else loves gold, right? You know, it's useless unless people are going to trade it with you. Now enough people to the point of these massive institutions, including governments, you're saying it's inevitable. It has to happen.
Absolutely.
It has to go up. There's no other way.
When Satoshi did the white paper, what was that, back 2008, 2009?
You're blowing my mind, by the way. You're blowing my mind right now. I don't even realize this. Because this is what I've been sitting on. Like, is this real? Is this really going to happen? That's what we're here for. Yeah, exactly.
Yeah. So Satoshi said, like, you know, I'm going to introduce this currency that cannot be controlled, cannot be manipulated, cannot be hyperinflated.
Yeah.
And either you believe in it or you don't. But he said an interesting thing. He said, okay, so maybe this could become nothing. It's just a project that a few geeks and nerds got into and, you know, it didn't go anywhere. Or maybe it will become the reserve currency of the world, like gold was always the reserve currency of the world, right? And he said, okay, it's either going to be nothing or it's going to be the reserve currency of the world. Now, is there a chance that it will be worth nothing? And he said, no, I don't believe it'll be worth nothing. Is there a chance it'll become the reserve currency of the world? Maybe, but even if it was $1 billion to one shot, wouldn't you want to take that shot? You know, and back then Bitcoin were trading for like 10 cents.
Yeah, exactly. Back then, like, billion to one, let's go. It costs you nothing.
Laszlo bought 2 pizzas for 10,000 Bitcoin. So do the math on that, right?
Yeah.
Bitcoin was worth nothing. And here's this guy saying it could be the reserve currency of the world. So it might be worth accumulating a few. And as you said before, investing, but not banking the farm on it. Don't take out a big loan against your house, because you've seen people manipulate the price of Bitcoin down by half.
Yeah.
Right. And if you borrowed against the house and the house has gone down by half, then you're toast. But if you're putting in money that you can afford to lose and money that you can afford to sit on, because even if you look at the stock chart, like, stocks don't go straight up. They go up and down and up and down and up and down. And sometimes we have a GFC-like event. Sometimes there's a war. But if you've got good stocks that you know are going to be around for the long term, you hang on to them and they bounce back. And if you can, you buy a few more while they're cheap.
At the bottom.
As like 3 years ago, we didn't have any billionaires in Bitcoin, right? There was none.
3 years.
It was just the nerds and the geeks. And then like Elon Musk got in, Jamie Dimon got in, Ray Dalio got in. You know, these guys have got in just basically during the pandemic.
Yeah.
And we're starting to see Bitcoin was like less than 1% of the population were in Bitcoin. Now it's like 2.5%. And people go, oh my God, it's so
that's
volatile.
Small,
so
hey? Like, it's that small. So many people know about it, but only 2.5% of people are actually in it.
But you look back 100 years and say everyone knew about the stock market 100 years ago.
Yeah.
And they'd see it on the back of paper. But how many people were actually invested in the stock market 100 years ago? It was like literally the elite 1%.
Yeah. There
was 1% of people who were actually investing in the stock market back then. And of course, when the Boer War broke out in 1898 or 1899, the stock market went down, because let's exaggerate and say the 1% of people, there was only 10 people who held stocks. They all panicked, they all freaked out, they sold, and it took a long time for those guys to feel confident enough again to buy back the stock that they'd sold, right? Now, since the 1970s, when the stock market has opened up and they've got mutual funds and things like that, where basically anybody with $10 can buy stock, now they've lowered the barrier to entry. So as soon as the market crashes, there's someone like you and me jumping in and buying. So the volatility, if you look at a chart of the stock market over 200 years, massive volatility for the first century. massive, because there was so few people in there, and it was easy to freak them out, like a little flock of chickens, right?
Yeah.
But now there's more and more people in there, and Bitcoin dropped from 60,000 down to 30,000, but it didn't go down to 5. At the start of the pandemic, it went down to like 5 or 6,000, but it didn't go that low this time. Why not? Because we've got banks, governments, institutions buying it. As soon as they see it drop down to 30,000, they're like, pile on in.
Interesting.
Absolutely. So, whereas 2 or 3 years ago, they weren't there. Now there's more and more people. So when there's 5, 10%, 15% of the population who own Bitcoin, the volatility will decrease. It'll drop by a few dollars and someone will jump in and buy it.
Yeah. I wonder when that'll happen, like, and what percent would then make it more stable? Because look at, actual dollars, US dollar, Australian dollar, whatever, it is quite stable compared to the stock market, but compared to crypto,
they fluctuate every day, but only by a few cents.
But a little bit. You're right. It doesn't freak you out. Crypto, you wake up and you're like, holy shit, I just lost like 30% of my wealth. That just happened, like in the last few weeks.
You're just showing your white privilege here, Scotty.
Well, that's very true. I'm one of the 2.5%. And for most people...
You're in one of those countries where they report on the news and say, the US dollar's up or down 1 or 2 cents. But imagine if you lived in sub-Saharan Africa.
Yeah.
All of a sudden the US dollar has gone from 50 cents to $2 to $3 to 70 cents to, because they're measuring it in their own currency.
Yeah, right. Yeah,
you've been blessed to live in a country with a stable currency, but
their currencies are going crazy. Hey, they're like Central African currency, really. So they'd have the volatility of crypto, but in their daily living, when they go to the shop to buy food, and it's like, can only buy half of what I wanted today because the currency changed.
A lot of the stuff is imported in those places. So, I mean, I've been going to Bali for 20 years, right? It's just like Australia's holiday destination.
Yeah,
and, 1 year I went there and the exchange rate was 8,500 of their dollars to one of my dollar. And, then the next year it was 10,000. Then the next year it was 10,500. Then it came back down to 8,000. But it's hovered around about 10,000 for 20 freaking years.
Yeah, right.
But any time these guys get close, as an emerging nation, anytime they get close to like, we're almost starting to eat away at the capital and starting to pay off our debt to the IMF, guess what happens? Coincidentally, their currency is revalued. Which means they've climbed up 3 steps and then they've been knocked down 5. Yeah. And so they have to start coming
by the IMF, right? Get back to your place. We can't all be rich around here. 360 million
currency
people.
Manipulation is massive, and obviously, the central banks are controlling the game, and people like you and I could never actually hope to win it unless we had crystal balls or unless we had a time machine or something like that.
Well, you've got a crystal ball right now, mate, because you're saying it's going to go no less than 28, which is about where it's at. I think it's 30, 31 today, and it's going to go as high as 100,000 in 24 months. So who's got the crystal ball? Have you?
Well, I'm putting my crystal balls on the table for the first time.
For the first time in 30 years.
First time in 30 years.
Because you see the indicators, that stock flow or whatever it was called, stock to flow.
Stock to flow model, and also what's going on in the world.
In the globe. Because I was thinking about this when you were saying earlier, and get chickens, grow food, have less reliance on the system. Absolutely 100% must be done. But then we were talking about buying silver and gold coins and going, hey, mate, I got to get a gas of fuel. Do you want to take this gold coin? It's real. What about Bitcoin? Everyone's got one of these. I can just open up my phone and go, hey, mate, can I send you, a little bit of Bitcoin? And you can pay this guy because, or the guy at the cash register is like, you go to the small stores and be like, hey, mate, cash is trash. What about some Bitcoin for some fuel? And they'd be like, yeah, let's go. I'll take your Bitcoin.
And
it's so much easier.
There'll be someone else who will.
There'll be someone else on the street. It's so much easier than gold and silver. So again, the utility, if it can be accepted, like we're saying, and that percentage of people who use it increases, to that 5, 10, 15, whatever it is. But the utility is way more than gold and silver. Me carrying a bag of gold and silver that I can get robbed on the street, or me carrying Bitcoin on my phone that's got a face lock and an access code and you name it. Again, for where we're going with an inevitable currency inflation, hyperinflation, and I agree that hyperinflation will happen. Guys, hyperinflation is when shit just goes crazy. You can't even keep up with it. One day you wake up...
Venezuela.
Yeah, exactly. You can't keep
Germany.
Up with it. And that's inevitably, you print this much money and you create this much chaos, it's going to happen. So when that happens, people will be looking for other ways to exchange value, potentially Bitcoin and other cryptos pegged to Bitcoin, because Bitcoin moves and everything else does, have a lot more utility, or a lot easier to do. So maybe, again, for that average Joe who's got that little bit of extra cash, that 10%, whatever it is on their income, gold and silver, yes. What about setting up, like you said, one of those wallets? I do it on Revolut, Revolut app. I'll include a link in the description, guys, and you can check it out. It's really great. But I think I get a commission too. No, what is it? Like 25 bucks for referring someone. So there you go. Use my link. Yeah. But Revolut's great. I've got it set up that it's just, I had it set up, then I turned it off because I freaked out. I was, fuck Bitcoin, but it was just buying crypto in the background. I think it was like 50 bucks a week. I didn't even know it was there. And it was just buying 50 bucks of Bitcoin every week on my app. Maybe people can be doing that right now. While times are still good, make hay while the sun shines. Get something like that set up, and that money that you forget about anyway, or you're going to spend it on something useless, have that being just automatically buying Bitcoin. Backing on Jeremy's crystal balls here, then, that it is, and I've seen 500,000, but you're saying 100,000 would be a bloody good win.
I'm conservative.
You are conservative, and I love that. So maybe, again, because I want to help people, that's what this is about. For the average person right now, go and set up a Bitcoin wallet on Revolut. Takes 2 minutes, easy, or Binance or whatever you're using.
Do they get $25 worth of free Bitcoin, or is it just
probably? I don't know what it is. There's some,
you need to check that, mate. Make sure they get something free.
Yeah, right, exactly. Probably there is. They get something. They get the first exchange fees or whatever it looks like. But some sort of app, doesn't matter if it's Revolut or whatever. Use something and start to get that Bitcoin coming in. Move the extra money that you've got there each week away from fiat, away from your Aussie or your US dollar, and start putting it into Bitcoin as a bank to the future against inflation. That's what I'd be recommending. What are you thinking?
Yeah, I mean, like before the plane crash hit, right? Everything was going wonderfully well, 2000, 2001.
Yeah.
I actually, at that time, I was in my 20s. I took out a $500,000 loan, right? Took out a $500,000 loan and invested it in the stock market. Right?
Holy shit, you got big crystal balls.
But I also insured it, so that if the market crashed, then I could just hand the stocks back, right? And the insurance is a tax deduction. It's like when you buy a house, if you're investing in a house, you buy insurance in case the house burns down, right? You can insure your stocks, you can insure your crypto and things like that.
There you go.
Don't worry about how, we'll sort that out later. It's very complicated, but I insured my stocks. So what happened when the plane crash hit? Obviously, tech stocks went down. People were panicking going, oh my God, no one's ever going to travel in a plane again. So airline stocks went down. Banks and insurance companies went down because they went, oh my God, there's going to be billions of dollars paid out for these buildings. And then there's going to be a war, right? And we had a big fear there's going to be this ongoing war with the terrorists. We didn't even know who they were back then. Yeah. But people in Australia started calling up their friends in America saying, are you okay? I love you. In case there's a world war tomorrow, I want someone to say I care about you. So stocks in Telstra went up because everybody was phoning everybody.
Yeah.
Stocks, people started accumulating tinned food and bottled water. So Coles and Woolworths stocks went up. So in my portfolio, where I'd borrowed $500,000, which was a lot of money back then,
bloody hell.
A couple of my stocks went down and I just handed them back. But I actually had gains in the grocery stocks. I had gains in the telcos. And I'm like, money for jam. Like while the world is burning down, there's always an opportunity. When there's a crisis somewhere, there's always an opportunity. All right. And now we've got this money printing crisis because the banks don't know what to do. And they're going, oh my God, we've printed so much money and now the prices have gone up. People are complaining. What are we going to do? Well, I don't know. You could actually have decent currency backed by something. Or guess what? When people start complaining the prices of food have gone up, the government's going to go, yeah, let's just get the central bank to give them more stimulus checks. And that'll keep them happy. But then the more stimulus checks you print, the more the price goes up. And this is why we had things like, Weimar Republic in Germany and Brazil and Zimbabwe and these kind of guys, Venezuela, where the money printing started and inflation went up by like 10%, 20%. All of a sudden it's 300%. 10,000%,
wow.
60,000%, because it just starts this curve where you're printing money to paper over the cracks. But the more money you print, the more it's worthless, and people are accumulating this cash and they can't buy food. So you start printing more cash. It's a bit of a nightmare.
Mate.
Point of the story is accumulate something where you're less reliant on the system and where they can't control it. They can't control the price of my eggs. I've been getting free eggs for the last couple of years. Price of eggs in Australia recently hit $14 for a dozen.
What?
And a few years ago, it was $2.40. It was literally 20 cents an egg. All right. A few years ago, it was $2.40 for a dozen. Now it's $14 for a dozen.
That's ridiculous.
organic, farm fresh, blah, blah, blah. But mine are, because I know what I feed my chickens, right? Everything's organic. So if you're less reliant on the system and just with a little bit of money, you're just taking a bet on the long term. Every time you go grocery shopping, if you buy a little bit more tinned food and a little bit more bottled water, stack it away in the back of the pantry. If there's no world war, great. If there's no food shortage on asparagus spears or corn or whatever, great. You've still got that there for the next 3 years, right? It's okay. It's going to be used. And like, if you didn't know, Scotty, if you didn't know that the Bitcoin price had tanked, if you weren't watching the social media and the news because you live out in a log cabin in the middle of nowhere with your chickens and you're growing your own veggies,
we got 30 chickens.
Right? You wouldn't have panicked. You wouldn't have sold.
Yeah, that's very true. Yeah.
You just keep your stuff, and in 3 years' time, it's going to be fine again. As I say, like when the planes went down, stock market tanked, but within a year or so, everything was back to normal. This is a crisis that we're going through, and it might last 2 or 3 years. It might last up to 5 years, but there is going to be companies who are making money while there's chaos in the streets. You know, every time there's a crisis somewhere, there's an opportunity somewhere else. Blockbuster video stock went down to zero, but Netflix stock went up. You know, we're all streaming on these services now. You know, people stopped having meetings, and so the vacancy rates in buildings went up, and landlords who own commercial properties were screaming and crying, but Zoom stock went up, right? And now we're starting to see it flowing back the other way. Hedge your bet. So I'm talking like crypto in general.
Yeah,
Bitcoin is obviously the godfather of crypto, and Bitcoin has got that limited supply. Other cryptos can mint more, so they can manipulate their own prices. And you have to look at them again, like looking at the stock market. There's 1,000 stocks on the stock market. Maybe the top 200 are good, but again, good at different times. Because if there's a war on, you want to be investing in armaments and phone companies and food companies and things like that. If it's peacetime, you want to be investing in discretionary spending and fun and entertainment, luxury, things like that. Or, so diversify. Don't just put all your money into Bitcoin. Like, you wouldn't be stupid enough to put all your money into Blockbuster Video or put all your money into MySpace, all your money into Nokia when everybody used to have a Nokia phone. Because something comes out of left field and suddenly the market leader isn't the market leader anymore. So if you've got the top 10, or if you've got a diversified crypto mutual fund, you know, I'll just advertise Bostoncoin right there at that point, where someone's actually doing the diversification for you. If one of those things disappeared, no problem. Like we just had the Luna crash, right? And I'll be absolutely upfront. Bostoncoin, we had 2.5% exposure to Luna, right? So when that thing went to zero, from $100 basically to zero, 2.5% of our portfolio fell over. And that's okay, because 97.5% of our portfolio is still good. However, we have one of our big competitors, and I won't mention their name because I don't want to rubbish them, but they had between 20 to 50% of their money in Luna. And Luna just tanked. Now, these guys, like, they obviously tanked. They lost a lot of money. And it was because they forgot the number one rule is diversification. You know, you don't put half your money into 2 stocks. Like, you got to have at least 10, or put it into a portfolio where someone's got 30, 40 different things. And you were asking me before about me personally. I'm like, yes, I've got gold. Yes, I've got silver. Yes, I've got Bitcoin. And I've also got other cryptocurrencies. And, you know, in 10 years' time, if Bitcoin takes over as the reserve currency of the world and gold is worthless, well, I'll have some shiny metal and I'll be able to show my grandchildren and say, this is what used to be money back in the olden days. You know, and if Bitcoin doesn't take over, if Bitcoin gets obliterated somehow or surpassed by a new technology, like MySpace got surpassed by Facebook and Nokia got surpassed by Apple and Samsung, then if that technology disappears, then my gold and silver is going to go up massively in value. So and I'll be able to buy stuff with that. And I'll be able to say to kids, oh, this Bitcoin thing, that's what we used to use for money back in the olden days. You know? Always diversify. Absolutely diversify for safety. And that rule has been the same for centuries. And this is why I'm looking at the guys who are on YouTube and TikTok. Check their credentials. Check where they've been getting their facts from. Have they been in the markets 20 or 30 years? Again, I was new back when I was 19, 20 as a financial advisor, but I read the books from the guys who'd come before me. I sat at the feet of some self-made billionaires and learned the lessons. I looked at the charts and I could actually back up what I was saying with solid facts based on historical precedent. Some of these guys are just going for clickbait. So,
Mate, you are a champion, and that's why I got you on to the Tribes United. Is you are someone that I trust. You know, I know you personally, met in Bali. I know 10 years ago it must have been now, and you know we've been friends since then. So thank you for sharing your wisdom, guys. What's your company called, and how can people get in touch with you?
It's Boston Trading Co.
Lift your shirt up a little bit. You can see it. Yep. There you go. Boston Trading Co.
It's bostontrading.co.
Cool.
So no M on the end. It's not a .com. It's a .co.
Great.
So Boston Trading Co. is where we have a diversified portfolio for people who don't want to pick their own stocks and shares, people who don't want to pick their own cryptocurrency. You just dump it into a mutual fund. We look after it. We do all the buying and selling for you. When the pandemic hit and the stock market went down by 60% and Bitcoin went down by 60%, our portfolio went up by 50%.
Wow.
Because we're diversified into the other areas that actually do well when some things go down. Yep. So bostontrading.co is where we actually look after the money for you. But yeah, there's some people out there who say, I want to do it myself. Like, cool. We're going to help you. Even though you're not dealing with us, we're going to help you with our sister site, Cryllionaire.com. So it's CRY for crypto, like crypto and millionaire smushed together.
Oh, yeah.
And we just provide free information. So if you want to do it yourself, at least you can avoid the scams. At least you can avoid the dodgy things. Because again, like the stock market, like the crypto market, there's a lot of dodgy crap. But there's also some good stuff. So if you're going to do it yourself, least we can do is actually provide a guidebook for you, and we update it every couple of weeks. So there's new projects and things that you can actually get into, like basic attention token. And there's heaps of places where you can get cryptocurrency for free. So even if you don't have any savings, you can get cryptocurrency for free and be part of the new revolution. Sweatcoin's another great one. You know, people who count their steps as they're running around. You know, this coin will actually pay you for running around. Same as basic attention token pays you just for surfing the web, because they want your eyeballs. They want you looking at their ads and things like that. So why not? I'm looking at ads anyway. I may as well get paid.
Might as well get some. So Cryllionaire.com, you'll teach us about these things and how to actually invest ourselves into crypto, which would be great. And the diversification across the crypto assets. So I was saying to people, like, start buying Bitcoin, which is a good beginning, but diversify within crypto as well. And to get that education, we head to Cryllionaire.com. I trust you, mate. This is the thing. Like, I trust you. You have a good heart. I know you personally. Like the TikTok. Thanks, brother. The TikTok and YouTube Insta star guys, there's clickbait stuff. A lot of it is self-interest. I've not looked them in the eye. I've not sat and had a meal with them, you know, like, and so I can recommend you to people that are listening because I trust that your motives are pure. And after 30 years, you know, you've earned the stripes. You've earned the stripes. Yeah. So bostontrading.co, go and check out Jeremy over there. And it sounds like, to wrap it, mate, what you're saying to people, and I'm fully in agreement with you, less reliance on the system. Have some veggies, have some chooks. Maybe you can't feed your whole family, but at least you don't have to be, you know, all of your money has to go to actually your basic needs, right? And maybe in that, like, get rid of some of the things that you don't need. You know, simplify a little bit, especially, you know, if you're not earning so much, simplify a little bit and take that. And now you've got that extra invested either into that infrastructure, veggie gardens and chickens and, you know, being a bit off grid. But then let's look at predominantly, it sounded like you were saying, and correct me if I'm wrong, but gold, silver, crypto, beyond Bitcoin, but crypto, gold, silver, crypto is a great way to store value and be able to exchange value in the future. Again, the highest utility there would be crypto, but coins of silver and gold could work. And then maybe some other commodities, but decrease, again, same as with your food, decrease your reliance on the system and their monetary supply, which could go into hyperinflation. So get your money out of cash, out of the system, and put it into these more decentralized gold, silver, crypto asset classes. Doing those two things is pretty much a good bet for the future of what's to come.
As much as you can. I mean, not all of us can live in a log cabin in the middle of nowhere with no social media and no news and that sort of stuff.
I want no social media, but I can't yet.
Let's face it.
One day.
If you lived on a farm out in the middle of the boondocks and it was like, you know, ancient Rome or ancient Greece or whatever, you wouldn't even know. Like if the king got killed and a new king came in and they raised the taxes, you wouldn't even know because you're just out there farming your potatoes and raising your chickens and things like that. Yeah. From one year to the next, you wouldn't have a clue what the currency was worth or who was in charge, and it doesn't matter. So, yeah, not all of us can live that idyllic lifestyle, but as much as you can, become less and less reliant. So if you've got a couple of solar panels on your roof and there's a blackout. It doesn't necessarily mean there's a war, but maybe just the electricity goes out because everyone's using their air conditioning in the middle of summer or using their heaters in the middle of winter. If you lose power for a couple of days, you're going to be okay with a little bit of solar panel. And if you've got some tinned food in the cupboard, you're going to be okay.
Yeah.
So this is what we're looking at. It's becoming less reliant on the system, becoming more reliant on yourself,
more self-reliant,
educating yourself, or outsourcing to someone who can actually do it for you. So anybody who goes to the bostontrading.co, we'll send them the free monthly newsletter.
Great.
Okay, so it's not going to bother you every day with rubbish, but just once a month we send a newsletter saying, here's what's going on in the world economy, here's what's going on in the stock market, here's what's going on in crypto. And you can actually go onto the site and you can join that for free. You'll also get a free copy of my book, which was the one issued in 2006, which is all about how to pick your own stocks and shares. So people are like, I don't care about crypto, I don't want to know about crypto. Cool. Here's how to pick your own stocks and shares so you don't have to rely on somebody else to do that for you. But on the website, you can actually see like the last 50, 60 newsletters. So you can go, oh, this guy said he knew that the pandemic was going to happen. No, I didn't. You can actually look at the newsletter from September, October 2019. So I never mentioned about China virus, never mentioned anything about that, but I did mention this is where you want to be investing because of what's going on. Yeah, there's always indicators. There's always indicators before something's happened. And it's best to jump out as soon as you see the iceberg dead ahead. You don't want to wait. You want to jump out, and maybe you're the first person and you look like an idiot and everyone laughs at you. And that's what happened to me. In 99, when I was pulling people out of the stock market continued to go up for the next 18 months. In 2006, when I was pulling people out of the property market and out of the stock market, people were laughing at me. Like, whatever, I can afford to be laughed at. Like, no skin off my nose. You can't beat me up. You can't take away my birthday. You can just call me an idiot and it doesn't matter. But then later on, people go, oh, holy crap.
He was right. So right now, it's get out of the system, effectively. Get out of the system.
As much
food
as
reliance, energy reliance. Yeah, of course. Food reliance, energy reliance, and financial reliance. Get out of the system and be as self-reliant or with these gold, silver, crypto assets as possible. Or go out to
saving 10% a year. So like not everyone can go and be on the remote island in the middle of nowhere. But if you can get one solar panel, if you can get 5 tins of food, if you can save 10% of your income, and imagine if you became 10% more self-reliant every year. It might take a decade, but in the next decade, you wouldn't care who was in control in the government. You wouldn't care if Russia invaded China or China took over India or whatever. You wouldn't care. Doesn't matter. They're not controlling my currency. I've just got my food. And even if there is no such thing as the internet and no such thing as currency, you've got your tin of peas, you've got your chickens, your kids, you can educate them at home, whatever. Like, who cares? Just becoming that space where you don't have to panic about every little item on the news and maybe turn off your social media for a while.
Not a bad idea. Not a bad idea. Hey, thank you so much, Jeremy. You are an absolute champion. Guys, go and check out Jeremy Britton. This man, as I said, is a man that I trust, and hence why we're in this conversation. I appreciate you sharing your wisdom. You have a lot of it, particularly around this subject after 30 years of passionately diving into it. So you were my go-to guy for this conversation. But yeah, bostontrading.co sounds great. Cryllionaire.com. We'll put the links in the description. And otherwise, thank you so much, mate. And I hope to have you back for another conversation, maybe just before 2024, June 30. What do you reckon? Or when it hits 100,000, let's do it. Let's do it. All right, mate. Thanks so much. Well, that was an exciting conversation, and I hope that you got as much wisdom out of that as that I did, and maybe it sort of changed your perspective on a few things like it has mine. If you enjoy these sort of conversations, join the Tribes United. Come and connect with other leaders like Jeremy and like our other guests on this show that are here to come together to help each other to really thrive and prosper through these times. Tribesunited.org. Head over there, join the community, and become part of this conversation. And if you did really get a lot out of this, do us a big favor and share it with other people. Tag somebody, share this to somebody that you love, and let them gain this wisdom as well as you. All right? Thank you so much for joining us, and we will see you in the next adventure.